MACD trading strategy. Scalping strategy, best one that I found. Going to share it with you here in just a few minutes. It's going to be a really short video. Hang on till the end because I will be sharing with you the one strategy that works the best and the best way to use this indicator. And again, just be in just a few minutes. Now, this is part 3 of a series. So if you haven't seen the other 2, I will put the links in the description below. In fact, they'll be there as soon as you see this and you can go through those. But while you're here, also go ahead and watch this one first. So there are 3 parts to this indicator. We covered the first 2 in parts 1 and 2. MACD stands for Moving Average Convergence Divergence. And the 2 moving averages that are traditionally used, you can change these if you want to. But traditionally, it's the 12 and the 26 exponential moving averages. And that's the blue line. That's the MACD line. And then the red line here is what they call the signal or the smoothing, and that is a 9-period exponential moving average of the blue line. And again, the blue line is the difference between the 12 and the 26. So it is not a trend indicator, it's an acceleration indicator. It tells you how fast is the 12-period exponential moving average moving away from the 26. So it's an acceleration indicator. So the problem is, okay, how do we read this? What is a shortcut way of reading this? And so now we've added, let's see here. Oh, I've already added it. Yeah. So now we've added what we call the histogram. And by the way, in some trading platforms, it will be called diff, D-I-F-F, or difference, which actually in my mind is a better term because histogram is just a way of plotting any indicator. It's just a plot style. But what it's measuring is the difference between these 2 lines. Because just eyeballing it, and I love to have things that are very objective and rule-based, and if you just eyeball the difference, it can be kind of tough to tell. So, again, the difference is between these 2 lines. So, whereas MACD measured the difference between the 2 moving averages, and the signal line, the red line, is just a smoothing of that, so you don't have to be worried about all these little jiggles and wiggles. Now, the MACD histogram is down here, and that's not going to measure the difference between the 2 moving averages. We've already got the blue line for that. That's going to measure the difference between the 2 lines of the indicator, the MACD line and the signal line. And so it's also measuring the difference, but now between the 2 lines of the indicator. So this is perhaps one of the easiest ways to read the indicator. So if you'll notice here, and let me get some new notations on here, take the little dots off of there. And what you'll see, if you just look at these 2 lines, it can be kind of hard to tell, okay, when are they moving toward each other? When are they moving away from each other? And this makes it real easy. By the way, what the color coding means is when it's green, that means the blue line's above the red. When they're red, it means the blue line is below the red. So if you look here, you will see that when they cross, the histogram is at 0, because there's no difference between the 2 lines on the indicator. And when the blue line is below the red line, again, it's a faster line, then they go red, so that's nice. Then you'll notice that there's 2 shades. And so what that means is when you have a darker shade, that means that the blue line is pulling away from the red line, indicating, again, acceleration. All right, so here we've got in these 4 bars. You could just take a look at this, and you can see, oh, okay, so because it's dark green, that means that the blue line is actually moving away. It's not moving parallel, but it's moving away from the average, the 9 exponential period moving average of the MACD line, and therefore we have what? Acceleration. And why is that important? That equals strength of market move. Now here we get light bars. They're still green. And why are they green? Because, again, the blue line is above the red. So as long as there's that, then they're going to be green. But they're moving toward each other. And so that means still in bearish or bullish territory, but acceleration has slowed down a bit between these 2 lines. And so it's a beautiful, nice, simple, that's what I love about this. It's simple color coding so that you don't have to be sitting there and measuring all of this stuff out mathematically using a Texas Instruments calculator as we used to do in the days of yore. So color coding, cool, nice, like it. Now, Same thing on the bearish side. So as we come down, we're going to have to wait for, again, now notice the green line still above the red here, short-term moving average above the long-term, but that's not what MACD is measuring. MACD is measuring the difference between the indicators, the two lines of the indicators. So it's actually catching this when this line crosses that line where it's 0, and then when the faster line is moving away from the slower line, accelerating against it, say, look at the angles, then it turns dark red. So what that means is we've got strength to the downside. So let's take an example. Let's finish up as I promised. I'll show you at the very end here how to trade this, and this is what we're going to do. So we look for trend first. Remember, step 1 is trend. MACD does not measure trend, and that's covered in parts 1 and 2 of this video. So first we want to trade in the direction of the trend, and then we look for strong trends. And this indicator helps us do that. We wait for it to go to a dark red. Of course, you can color code these any way that you want. And then we say, okay, the trend is down, but some trends are weak and some trends are strong. Just because the market has an uptrend doesn't mean it's going to go very fast and furious in that direction. But we love markets to go fast and furious in our direction so that we make more money, well, faster and more furious. But no, we make it faster. Furious is when we lose money. So that's what we're going to do. And as you can see, when you look at price action, sure enough, the market actually did move down very, very fast. So nice price range. If you look at the price range here, from that high to that low, nice price range in, and this is what I like to do, draw a rectangle. So if your rectangle is taller than it is wide, that means you have a very strong move, and that is literally making a lot of money as determined by the range of the price in a short period of time, as determined by the number of bars that go by or the time here. So when you get a tall, narrow range rectangle on that move down, that is a nice, beautiful, fast profit. Of course, the big problem a lot of people have is, remember, this indicator is not measuring trend or it's not measuring timing. Now, that's a big question. When do I get into these trades? Because you can't just enter on any one of these red bars. For example, look at this one. Here's a red bar that's darker red than the others, but you wouldn't want to go short there. Right? That'd be no bueno. And you wouldn't want to buy this, even though it is a dark green bar. So you don't want to buy that. So how do you determine when to enter the trade? The timing issue. And that's another dimension of the chart. And so we don't have time to go into that right now, but fortunately I did record a longer presentation on that I give for free to all of my viewers. And I provide you the indicator that I use for this, my market timing entry indicator. And you can get it for free. Get the recording. It's available 24/7, no charge to my viewers. Go to indicatorwebinar.com, pick it up, and I teach you how to use it and the patterns to trade on it. So go get it, enjoy it. Oh, by the way, subscribe to the channel. I need more subscribers. And by the way, the benefit for you when you subscribe is then get notified when I come out with new videos. And of course, all these videos, I try to provide as much value as possible and give you good trading lessons that you can apply to your personal trading.